Gold down $30 per ounce. Silver down 4%. Today is not a fun day to be invested in the precious metals sector. Look, I may have a smile on my face, but trust me, I'm feeling the pain that you may be feeling as well. Are you invested in gold? Are you invested in physical silver? Are you invested in the mining stocks? We've made it through days like these. We'll make it through this one. But the big key that we need to look at is why? Why again did Lucy pull the football right before Charlie Brown went to kick it? We've been hit by body blow after body blow, those of us invested in the precious metal sector. Why? What happened today that caused the price to go down? And just as important, and you may argue even more important, is the fundamental story intact? And we're going to talk about that because I'm getting mad about this. I'm tired of this pain. Let's get started right now. The reason why the price of gold and the price of silver are down is one thing: Jerome Powell. He was testifying this morning in front of the Senate Banking Committee, and let me just read to you what he said. One sentence that sent the price of gold and silver plummeting. He said, "If the totality of the data were to indicate that faster tightening is warranted, we would be prepared to increase the pace of rate hikes." He said increase the pace of rate hikes. Maybe, I don't know what you think, that one word alone is what sent the price of gold and silver falling. Then he said the historical record cautions strongly against prematurely loosening policy. Blah, blah, blah. Do you ever get the feeling that we're living in like a fantasy world or that things aren't real? Let me know what you think about this. Like we're dealing with the Wizard of Oz when we're talking about Jerome Powell. I mean, it doesn't make any sense, especially the last 9 months. Like things are just strange out there because we know, right? We know the reality, boots on the ground, people like you, people like me. We know things aren't quite as rosy out there as Jerome likes to indicate, and that he doesn't have that much room to continue to tighten things. Let's be real here. Let's think about this. Let's go to school, put our thinking caps on for just 1 minute. The rate hikes that we've had over the last 12 months, they are the fastest in history, okay? It's not record high rates by the Fed, but it's the fastest rate hike increase in history. They did that after this insane money printing binge they'd gone on during 2020 and 2021. It just makes no sense. They went from being crazy money printers to crazy, disciplinarians. We're going to rein all this in. And at the same time, the country's got the $30 trillion in debt. The world has geopolitical strife like you've never seen it before. Let me know what you think about all this. Does it feel like a make-believe fantasy world, or am I dreaming? We'd like to thank our sponsor, First Mining Gold. They're a Canadian gold developer with 2 world-class projects in Canada. They also have a handful of other projects. When you total up all the gold in their resources, it comes to over 12 million ounces. They're worth checking out. I'll put a link to the company's website in the description below. Now, this is something key for you to understand about what's going on right now. Everybody likes to compare Powell raising interest rates to what Volcker did back in the late 70s. There's one big key difference that the mainstream financial media won't talk about, but we're going to talk about it, you and me. The big main key difference is when Volcker raised rates that high, there was just a sliver of the amount of debt that the world and the United States has right now, right? So he could raise rates like crazy because there wasn't that much debt. It wouldn't have that much of an impact on debt. Now that we have $30 trillion of government debt alone here in the United States and almost $300 trillion in debt on a worldwide basis, these interest rates have an exponentially higher impact on the economy. So think about it like that old steam locomotive. You probably like to talk about choo-choo trains, right? I do. An old steam locomotive that they packed the boiler full of coal, right? That was all the money printing that went on during 2020, during 2021. Now, that thing got hot, right? And they're trying to put it out, and they're throwing water. Those are these interest rate hikes, but it takes a while to cool it down. It's like a giant cruise ship, right? You can't just turn these things on a dime. It takes a while. There's a delayed response, right? And when the delayed response comes through, we're already in a precarious situation. Let's just go over a few things that are going on. Now, don't forget, I'm still with you on that pain we're feeling in the precious metals markets. But gold and silver, they look into the future. They look around the corner. And at some point, I'm not even going to try to predict anymore, but at some point, and it could be sooner as opposed to later, guys, gold and silver are going to look around the corner and see big trouble ahead and know that the Fed's going to have to pivot, and that's going to send strong signals. That's going to be supportive for the price of gold and silver. Gold and silver have always been money. They are the original money. So do you think the fundamental story for gold and silver remain? You're darn tootin' they do. But let's just talk about what's going on in the world, in the U.S. economy, that's going to tell us the Fed's going to have to pivot maybe a little sooner than later. The world GDP is slowing. We know that. The ISM numbers, right? That measures the amount of production going on in the manufacturing sector, in the service sector. You can sound fancy at the country club this weekend when you talk about the contraction in the ISM numbers. Or if you're hanging out in the backyard with the neighbors, drinking a can of Busch beer, you can use that one as well. Credit card debt, all-time high. Remember the almighty U.S. consumer. That just really ticks me off. The almighty U.S. consumer, right? Well, guess what? They don't have much room left on their credit cards, and they've carried a huge amount of debt on their credit cards. Oh, and by the way, there's even a little kicker on top of that. The rate they're being charged is at record highs as well, the interest rate. So they got these huge balances, and it's being added to at a record high rate. Now, I've got a buddy. He's one of the top realtors here in St. Louis, okay? I asked him the other day, I said, how's business? Are you seeing things slowing down? He said he's never seen it this slow in the 15 years he's been in the business. And if you really want to sound fancy, this weekend at the country club, you can talk about the inverted yield curve. Now stay with me here, guys. This is easy to understand. That basically means that interest rates on a short-term basis, like a 2-year basis, go get a 2-year CD at your local bank. You can get near 5%. That the short-term rates are much higher than the long-term rates. If you wanted to buy a 30-year CD, although they don't have those, but a 30-year bond, your rate might be closer to 3%. That's called an inverted yield curve, because the longer you tie your money up with someone, the higher the rate should be, but the exact opposite is the case right now. What's so important about that when you're talking about the inverted yield curve is to bring up the fact that that is always been a sign of an impending recession. Well, we're on quite a roll, aren't we? I'll just mention a few more things for you. Real wages have been contracting for 21 months. That means when you factor in inflation, the wages people are making have been going down for 21 months. That means they don't have any money to save, right? Who can save money anymore? Because that's being demonstrated in the savings rate, which is at near all-time lows, right? People are dipping into their savings. People are using their credit cards. just to get by. You know what? I got one more bonus fact for you. There was an article that came out last night that said that people in rural Kentucky are totally now relying on food banks to eat, and they're waiting in lines as long as 8 and 9 hours just to get some food handouts. But everything's great out there. We don't have any economic problems on the horizon, do we? Hey guys, I hope you enjoyed this video. I hope now we know why gold and silver got clobbered today, but I also hope we have a strong feeling for the fundamental story, right? The fundamental reasons why we hold precious metals and why on a long-term basis we feel comfortable doing so. Most important, I hope you enjoyed your time here in the basement. You know you're always welcome. Watch another video. I'll see you soon. Hey everybody, it's Ron from Ron's Basement, live on the log flume with Lily. Lily, say hi.